Mic check. 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 So if you're watching, mic check, you can help me out. I'm trying to get this volume correct. Mic check. I'm experiencing some mic check. Some technical difficulties with my microphone. So if you're watching, if you can help me out in the chat, try to get this right. How does the mic audio sound? Is the music too loud? So if you're watching, mic check, you can help me out. I'm trying to get this volume correct. Mic check. I'm experiencing some mic check. Some technical difficulties with my microphone. So if you're watching, if you can help me out in the chat, try to get this right. How does the mic audio sound? Is the music too loud? So if you're watching, mic check, you can help me out. Can y'all hear me? Put a 1 in the chat if you can hear me, please. I'm just trying to get this audio right. I need to know that you can hear me so that I can make sure that you can understand what I'm about to show you. Alright, if you can't hear me, please let me know. But Alright, so here we go. Today's video, let me start by introducing myself. Alright, my name is Penny the Dollar FX. What I do in my videos is I basically show people how to day trade. And basically utilizing the steps or concepts or the practices that I practice, the strategy, and just show people how I do it. Alright, so if you find value in the video, please All right, so here we go. Again, my name is Penny the Dollar FX. What I do is I teach people how to day trade using the practice or the strategy that I utilize, which is basically using supply and demand, support and resistance, price action analysis, and the moving average. All right. Sounds like a lot, but once you get familiar with it, you'll understand that really all it is it forms a strategy. All right. And you have to have a strategy when you come to the market. All right. With that being said, what I want to show you in this video is show you how I measure my risk and how I measure my take profit. All right, that's so important. So, first thing you want to do is when you go to TradingView, right? It's TradingView. You go to TradingView. And you want to create a paper trading account. If you don't know what a paper trading account is, I've shown this previously in previous videos. But a paper trading account is just an account. It's where you can put basically digital dollars in the account, and you can learn the practice of day trading. All right. So that's what I've been doing for the last 3 years. That's what I've been doing for the last 3 years. I've been basically playing with the monopoly money here in TradingView and basically figuring out a strategy in order to trade the market. So you have to go and create a paper trading account. I would not recommend. Again, this is not financial advice. I'm no one's financial advisor. I can't advise anyone to do anything with their money. But I would not advise anyone to take what you're learning here, right here in this channel or in this one single video and attempt to do it without practice. All right. If you attempt to do that without practice, you're setting yourself up for financial suicide. It's just that simple. All right. So you need to make sure that before you go, and because there's so many factors that you have to take in consideration. You have to take in consideration the spreads. You got to take in consideration the leverage. You got to take in consideration the lot sizes. And if you don't know what any of that means, it's going to impact your capital when you attempt to trade. So you have to know or have to have some familiarity with that. All right. But again, this video is for anyone who's basically on their trading journey, anyone who's been introduced to day trading, unfamiliar with it, and you think you may be interested in it. This video is for you. It's simply to show you the fundamental science, if you will, or the fundamental practice of how you take a ticket order, right? Which this is right here. How you take a ticket order and you use this ticket order to enter your information in any brokerage account. All right, so if you don't know what a brokerage account is, I'll explain that too also at a later time. But a brokerage account is an account where you're going to put your real capital in so that you can trade. All right, when you put your real capital in a brokerage account, you don't want to liquidate your account in the first couple of hours. You don't want to exhaust your account. In other words, you don't want to go from whatever amount you put into it to zero in a matter of seconds. Because if you don't have a proven strategy, if you haven't practiced trading, it literally can happen like that. All right. So day trading is definitely by far not easy. I'm not going to sit here and pretend like it's easy. But again, it's something that I've been practicing. I've been practicing it since 2019. I've been practicing. And I started off practicing it with this right here, paper trading. So what we did here is we went over here, we went down to paper trading, right? And if you go over here where it says accounts, you can literally put this drop down, push this drop down, and then go down here and create an account. All right, I created this account with $5,000 just to illustrate how you take trades, how you enter and exit the market and all that good stuff. All right, but while we're here, it's pretty much an opportunity, I suppose, as any, to go over what this is. All right, so what this is, when we come over here and we press these tabs, what this is what you call your ticket order. All right, this ticket order has ticket data. It has the data concerning your type of trade style or your type of trade, if you will. For instance, if you wanted to do a market trade basically it places your order right then and there, right at the earliest fill time. Right, it's going to place your trade pretty much instantly. So in other words, if I decided that I wanted to take this style of trade, I would put it under market and I would press buy and it would get filled immediately at the next price opportunity. All right, it basically gets filled the quickest. All right, you get in the market the quickest. Doesn't necessarily mean that's always the best way. All right, but it just is another means in how you enter in the market. All right, this right here, the limit is where it's more or less a pending style of trade, if you will. So for instance, if you saw price coming back up to this level up here, all right, hopefully you can see this behind but if you saw price coming back up to this level where this bottom yellow line is, what you could do is you could put what's called a limit order trade right here at this level. So when price comes back up here, right, if it comes back up here, all right, it will tag you into the trade. All right, so that's what we're going to do. We're going to put in a limit order request. All right, but the point is that's what this is. And then this is what they call a stop trade or a stop limit trade. And it pretty much combines the same two features of these two trades. All right, it's pretty much combining the feature of this market order trade with the limit order style of trading. All right, so those are your three styles. Those are your three categories, if you will, of trades. Then right here in the middle right here, this is your spread. All right, this right here is the amount that the exchange or the broker receives for just facilitating the trade. So this is the spread, the difference between the buy and the sell. It's truly the difference between the buy and the sell. So what happens is when you place your trade, all right, the spread is paid to the broker or the exchange or whomever collects the spread. All right, but it's the difference between your buy and your sell. All right, so that we have your sell, we have your buy tab. All right, right there's the sell tab. This is all the data if you were taking a short. Right here is your buy tab. This is all the data if you were taking a long. All right, so for the sake of this video, what I wanted to illustrate is how you calculate or how you would put the information from here or here on here. All right, so simply what you would do is you would come over here first. We already knew, or should I say we got this trade opportunity just set up for us right here. All right, this is the Euro USD, y'all. All right, when price broke underneath their yellow line, as per my earlier video, if you haven't seen it, I would encourage you to go watch it. All right, once price breaks underneath that yellow line, right, we start to look and say, okay, what zone are we in? What zone are we in? All right, remember the ingredients is this. You first want to make sure that you're in the correct zone. All right, you have to make sure you're in the correct zone. Then secondly, you look and see where you are in relation to the 200 moving average. All right, if you're below the 200 moving average, then ideally you should be looking for shorts, right? But the strategy is also predicated on the zone. The zone is just as important, or if not more important, than the actual break or crossover itself. All right, you have to make certain that you're in the correct zone. And so in this instance, this would not be a high probability setup. But at the same time, what you're saying to yourself is this. You should be saying to yourself as a trader, all right, we have broken below the 200 moving average. We got an entry right here. This was your entry candle. All right, so your entry price is going to be 1.06255. So what we're going to do is we're going to set that up to look like this. We're going to take our short tool, which is right here. Right? If you don't know, these are all my favorites. You can save them up here. So we're going to take our short position tool and we're going to line it up. You have to make sure you line it up with your entry. You have to line it up with your entry. All right, now that it's lined up with your entry, what you want to do is measure your risk first. You have to measure your risk first. I cannot stress that enough. All right, you have to measure how much you want to limit your losses to. You have to. All right, you only want to limit your loss to 1%. So because we only want to limit our loss to 1%, all right, what we want to do is we want to look back and look for the last two, right? The last two highs. And that's what we want to basically identify as our 1%. We want to make sure that we don't go if we start closing candles above this level, then it's safe to believe that we're about to go back bullish. All right, so I need you to see that. If we start breaking above and closing candles above these wicks, then at that point, we're basically looking to go bullish. All right, so what we want to do is we want to cover, that's going to cover your risk. That purple is what you're limiting your loss to, limiting your risk to. And then you want to go 3. All right, this is what we call a 3-to-1 ratio. All right, I'm basically showing you all step by step how this thing works. All right, you have to approach the market with straight up instructions. I think that's one of the things that if anyone is interested in doing this, I think that's one of the key things you have to stick to. You have to practice. And you can't be deviating from the instructions. You can't be deviating. And then if you do deviate from the instructions, you have to know like how much. But you don't know that if you don't practice. All right. So you have to have a set of instructions, and you have to practice those instructions in order to make them consistent, right? Consistent in the way you trade. All right. So in this instance right here, what we want to do is we want to make this our stop loss. So what is it? 106.725, we'll call it. We'll put in a market, a short, or sell rather,
What's going to happen here is we're going to put in this data down here. And then being that we want to limit our losses to only 1%, it's going to give us a lot size or unit size. And it's going to basically do all the work for us. So look, now we want to make sure our stop loss was 106.7. What did I say? 106.725. 106.7. And we'll go 106.725. Okay. If you don't know, what I'm doing is the top of this purple box is where you're like basically the last price line. Right? If candles start breaking above that, then we know for a fact that at that point, it's not even worth continuing to try to hold on to it. At that point, you just have to let it go. Like some things you just have to let go, right? So at that point, if it just runs away from us and it starts closing above that, you got to let it go. So what we're going to do is we're going to take that information and plug it in right here. And then we're going to go down here where our actual take profit is, and then we're going to put that in right here, that price in right here. So your take profit is right here, 1.04. We're going to go 1.04, 1.0435. You always want to try to use those whole numbers if you can, because the whole numbers is how, I mean, it's what the market responds to most that I found. Missing an 8 in there, right? Missing an 8 in there. All right, so what happens is now that you've put in your stop loss, this is your stop loss down here, and now that you've put in your take profit right here, and now that you've told it based on this account balance right here, right? You only got 5,000 in this account, all right? That may sound small, but the fact is all you need is like $500 to start an account, all right? So listen, right here is your account balance. This is going to give you data. It's going to calculate the data based off what you put right here. So right here, we want it to be 1%. And then it's going to give us the units, how much we basically, so the units basically is how much are you willing to risk per tick or per pip. All right, in this instance, we're talking about Forex. So in Forex, you have pips, which is price interest points, right? So in this case, you are simply wagering or risking, all right, 6 units, right? 6 units, 6,000, or should I say 6,400 something units, or 6,400 on average, we'll say, units per movement. So it moves right here per this scale. You see this scale? This scale over here is where it's moving. So every bit of movement, you are risking this amount per every tick or per every movement, up or down, up or down. So that's what this right here illustrates right here. So what you would do is you would literally go over here to your ticket order. You put all this data in right here for your take profit, which is down here. And then it's going to show you. It's going to show you right here, the dollar amount that you would earn is $70. Right? Right here, the percentage is 1.41. So as we can see right here, we need to go down there. We need to drag this down more. We need to drag this down more because right now we are at 1. So now let's see if this gives us what we're looking for. No, this is right. I'm sorry. This is right. Right here is where we're supposed to be measuring it at. This is right. It's like, what? That's too far. Right here is where we're supposed to be measuring it. All right. So it's just calculated different over on the ticket order right here. But this is our 3% numbers that we're going by. I was like, nah, that can't be right. So you have to utilize this tool, these two tools right here, the short tool and the long tool, right? Using this tool is the data that we're looking to put in over here. All right, it's going to calculate the lot size for us. It's going to calculate the lot size per the amount of risk we're risking to lose, and per our stop loss number, which is right here, price, our stop loss price, and per our take profit price. All right, as you can see right here, this right here is your, as it says right here, your pips. Right, this right here is right our spread up here. This is our spread. So once you do that, you will simply just press the sell button, and it'll set everything up for you. And that's how it's set up. And that's how you'd set this trade up. All right, so this is the Euro USD. All right, now I just did this for an illustration. I just did this because at the end of the day, people have asked, how do you set up the trade, or how do you enter the market? Well, this is how you do it. This is literally how you do it. You wait till you get an entry set up. Once you get an entry set up, all right, you enter the trade first, and then you use either your long or short tool, depending on what your position is, and then you just set up the numbers in it. All right, you just set up the numbers in it. And so right now, what we're looking at, is we're looking for price to come down. We're looking for price to come down. All right. And the thing about the market is, you have to understand, it may not just shoot straight down. It may not just shoot straight down. As a matter of fact, it could come all the way back up here. It could come all the way back up here and start playing around back up here and doing all this, right? Before it shoots back down. It doesn't have to just shoot down from where it's at right here. All right, so that's the reason why you have to limit your risk, because in the event, I'm just being honest with you, I don't know if the market is going down or not. Don't know, right? But what we do is we design a method or strategy, if you will, to apply to the market as the market starts to move, to put you in position to take advantage in the event it does continue to go down. Does that make sense? Because in the event it does continue to go down, then you want to be in a position to profit from it going down. Now, when I say it going down, I simply mean the Euro USD right now is being traded. All right, so the Euro dollar is being traded, or the Euro is being traded against the US dollar. All right. And so right now, that's what chart you're looking at. You're looking at the comparison of how it's being traded against one another. All right. So over here, this is what we call the price scale. Right? This is the price scale. And so as you continue to see price move, it's going to fluctuate in value, because nothing in the market, nothing in life for that matter, nothing in the market remains stagnant. Nothing remains static. If you know what I'm talking about, the price is always fluctuating, right? The value of anything is always going up or down. All right. So what we do as traders, as day traders, what I do is I devise a method, I devise a strategy that I employ over the market that puts me in a position, aligns me in a position to take advantage of the move, right? What we want to catch is the momentum. And so right now, that's what we're looking at. We're looking at an illustration of a price chart. This is a real price chart, right? Right here, you have prices over here on the side. And what we're looking at is we're looking at the euro versus the US dollar and how it's being traded on the market right now. All right. This up here is my broker that I'm using it on. It's a Wanda. And I'm simply using that to enter into my brokerage account right, and off on another screen, right, and I'm entering this information into my brokerage account to be in position to earn money. All right, and that's truly what we do as day traders, right? I think when you understand how to master, it's really that simple. You have to learn how to master your risk management. Risk management is the key to day trading. For anybody who wants to know, anybody interested in knowing, I think risk management is the key to anything, to be honest though, because in everything there's risk. We have risk in all that we do. And so when you put in, I guess, methods, or you put in means to kind of like minimize and mitigate your risk, then yeah, it sets you up for opportunities for when things are well. It sets you up for opportunities for it to kind of be more like a longer stretch, because you're sustaining risk management. You're minimizing the amount of loss you take. All right, so I don't want to go off on a psychological tangent about that, but really I'm explaining to you one of the key factors to day trading is risk management. You have to learn how to minimize your risk. That's why that's the very first thing we do. The very first thing we do before we even before we start entering our take profit is we identify our risk. We identify how much are we attempting to put at risk first. How much do we want to limit our losses to? And so that's what we do right here. Right? And so right now, the euro, as you can see, is trading below this, but it's also in this discounted zone. So if you were here earlier in this video, then you know that because price is sitting in this discounted zone, what we're waiting for price to cross back over. And then when price crosses back over, we're waiting for the long. That's really what we would be waiting for. We're waiting for price to go long. That's the reverse move. However, if it wants to keep cascading like it is right now and keep falling, we want to be in position to take that too. We want to be in position to take that too. So if it keeps falling, we want to be in position to collect the fall as it keeps falling. But the reverse move, right? The reverse move, especially if it comes down into this discounted zone, the reverse move when we cross above this 200 is what we're really, really seeking. Right? But we may not get that. It may continue to keep pushing this discounted zone lower and lower and lower. And if it does, then now that we're in a position, you just continue to hold it. You just continue to hold it until it crosses back over. All right. Until it crosses back over, you're going to remain in this down position. All right. And so I just wanted to show that. I wanted to introduce that whole concept, expound on it, because if anyone was concerned, how do I come up with these yellow and purple boxes, or where do they come from? That's exactly where they come from. All right. I'm not just making it up. I'm using this whole risk management concept and I'm practicing it to the fullest. And that's what you have to do. All right. So, if you find value, please like, comment, share, and subscribe. Again, if you have any ideas or concepts that you'd like me to play around with, I would love to. I mean, this is truly what I enjoy doing. So if anyone has any ideas or anything that, suggestions or recommendations, I'm all ears, right? But yeah, these are my setups. As you can see, these are my trade setups. And it works on them all. This is how you do it. This is how it's done, you go. And so this right here I wanted to show, because this right here is an example of when it goes, let it go. Like, this is an example. All right, I got in this trade down here. Right, I got in down here, but this is an example of when it's going, just let it go. I mean, no matter what direction it's traveling in, the only time you get out, I mean, don't get me wrong. If you want to take profit here, absolutely take profit. But the only time you would get out at this point is you would get out when it crosses back below, right? You'd be looking for the reverse, right? Remember, reverse trend trading is what I'm good at. It's not me bragging, it's just me being blessed. I'm good at reversing. I'm good at looking at the reverse. All right. So look, right here, when price get up here, right? If it starts to break down up in this red, and that's where we use our price action analysis, right up in here in this red zone, right? That's where we're going to start using our price action analysis. If it starts to break down, get out. Get out. Right? Get out. That's what I would do. Right? Now, if it starts to break down right here, and it needs to cross back under, it needs to start closing under the 200 for you to get out. Right? In other words, don't just abandon that. Like, let your winners run. Let your winners run. You want to let your winners run as far as they can run. That's how you maximize profit. You maximize profit by looking for opportunities like this. This is gorgeous. Like, this is beautiful. Like, look how this thing moved, and it moved well. And so the point I'm making with this is when you get in down here and price done, look, y'all, I need y'all to see this. Price done ran away like a runaway train. Look at this. Like, you cannot ignore this. You cannot ignore this. And so the point I'm trying to make is when you get an opportunity like this, oh my God. Oh my God. You get in down here. I'm trying to measure it for y'all. Be patient. I'm trying to get the tool out to measure it. So we got in down here. Now I need you to look. Price went all the way up here. Now, I don't know if you understand. This one move is 3.98%. This one move moved 207 bars. 207 bars is one move. Now, when you wager a $20 lot size, or when you wager a $10 lot size, I don't need to tell you what those numbers look like. That's an amazing push up. And so the only reason why you would look to get out this move, or only reason why you would look to get out this trade, is if price starts to close back down below this yellow line. But until then, I mean, you could have took profit obviously right here, because ideally that's where you want to take profit, right here. But what I'm saying is, once you enter the trade, you should be asking yourself, how do you want to exit the trade? All right. What is it that you're looking for to exit the trade? You have to ask yourself, what is it going to require for me to get out? What are your conditions? What are the conditions for you to get out? So like I was saying, when we got up here to the red area, and price starts to break down, that's another opportunity where we're going to use our price action analysis. All right, we're going to use our price action analysis at that point as price starts to get up in here, and start looking for opportunities to go ahead and say, okay, let go of the trade. And now we're looking for the reverse trade. We're looking for the reverse trend trade. All right. So that's a beautiful move. I just wanted to illustrate how far that thing moved and how we caught it down here, and it came up to right here, hit our take profit, and then kept pushing. All right. That's a great opportunity for someone. That's a good payday, basically, is what I'm saying. All right. So let's go take a look at some of the other ones. Right here, you have the NZD JPY moving just as beautiful. Okay, again, we set her up. We entered in right here, the very first green candle that crossed over the yellow line. Boom, got in on the next one. And now we're just waiting for it to hit our take profit. All right. Another good example, if you will, of how the strategies work. Right, the strategy worked. Basically, price came down here to what we call our discounted zone. Remember, the discount is always going to be down at the bottom. It's going to be our blue zone, and the premium is always going to be up here at the top. You can see right here where it's identified right here, which says premium. Down here, you have discount. And so what we had right here is we had price crossover right here Once it starts to trade above this yellow line, we jumped in. We jumped in on any one of these candles. We jump in. As long as it's down here relatively somewhere close to your entry, we get in, and then you just let it ride. You measure your risk first, come down here and measure your 1%, and then you just let it ride. You just let it ride, let it play out, right? And so that's a beautiful setup right there. Here, I'm hedging this. So if anyone's looking at this wondering what's going on here I'm hedging it. And simply what I'm doing is I'm knowing that price is coming somewhere, hopefully near our discounted area. Because this area right here is our discounted area. So if we can get price come down here and then cross above this yellow line, then the move you really want to look for, because look, we're in a downtrend. Remember, I'm a reverse trend trader. So the move that you really want to get is the long. We really want to get on the long side of this trade, because that's the one with the probability of the momentum now reversing in the direction of the trend. But right now, as you can see, we're still kind of like breaking down from the short momentum. And because we're still breaking down, because we're still not necessarily, we haven't switched bullish, it's still kind of low-key risky to jump in. You want to make sure we start trading above. Like, we haven't started trading above this yellow line. I mean, we had a moment where we broke above right here, right? Which is the reason why I broke out the tool. And you had a moment where we broke above right here, but we still haven't started trading above that. And so until we start trading above that, we're still basically in a short. We're still in a short market. And so that's what you see right here. All right, so as we see over here, we just crushed this. I mean, we literally just crushed this. Again, we got in, and now I'm gonna measure these for y'all, because I want you to see how this thing is so valid. I want to measure you. I'm just show you, look, boom, how many ticks that was, or how many pips rather. All right, look how many pips this is. Just that move right there. I don't know if you know, but that's a very, very good move. All right, that's a very, very good move. All right, and the reason why I say this is because when you start to play with leverage and lot sizes, you understand that exponentially grows your account. Right, that exponentially grows your account. Once you start throwing some leverage on this and you start throwing a big lot size, not even a big lot size, but a moderate lot size on top of this, you stand a chance to really get paid. All right, so that's a beautiful move. All right, but it crushed our take profit, and it's going up to the premium, and now it's starting to break down. Remember, it's in the premium where we start to exercise our price action analysis. Once we enter the premium zone, now we're looking at price action. We're looking for indications in price action, letting us know that it's breaking down. So now we're looking for opportunities for the short. Because remember, we're always looking for the reverse trend trade. All right. First and foremost, so for instance, once we got in right here, if you had gotten out right here or anywhere else, you don't get back in again until you get a setup. And you only really get a setup, right? In this instance, in this scenario, you only get a setup when price starts to break back down below this yellow line. If price isn't trading below this yellow line, then you don't want to take it. All right, and so that's the US dollar versus the Swiss franc. All right, right now the US dollar is crushing the Swiss franc. It's going up and exceeding value. All right. Again, these are some beautiful setups. I mean, listen, you got in down here. I didn't even get in this trade, but you can see right here where it hit the premium area. This is your premium up here, and then this green down here is your discount. Now you can see once we got in this premium area and we fell underneath that 200, price it just dropped. I mean, it just melted. Look at that. That's gorgeous. And I can tell you that's a heck of a move. Now I would have traded that only going a 3-to-1 ratio. So that would have been something like this, right? But even after your 3-to-1, what I'm getting at, even after your 3-to-1, see, I would have took it like that. I didn't get in this trade. I'm not going to even cap. But the point I'm making is, look how long that thing went. And those are the moves we're looking for. And that's a reverse. Now you measure how far that thing moved. That thing moved about 300. Oh my God. Oh my God. That thing moved 312, 12 ticks, or 12 pips rather. So those are the moves we're looking for. Those are the moves you're seeking. All right. Again, right here, we move. Let's measure this move. Again, these are beautiful moves. These are beautiful swings in the market. So yeah, so I just wanted to go live. I'm still new to this whole YouTube thing, y'all. So y'all gotta bear with me. Y'all gotta let me know what works. I don't know if recording the material and just putting it out like on my channel is the best way to kind of get, reach my audience. I don't know. But again, I figured I would go live. I would go live just to get in the practice of doing it, right? Just getting the practice of going live, and seeing what works for, the audience. But at the end of the day, this is truly what I want to do. I want to basically just get on and show people, whether it be me recording material or content, but I really just want to get on and share this information with people because I know, in the right hands, in the right mind, you'll know what to do with it. All right. I really believe that in the right hands, in the right mind, you'll know what to do with it. All right. Trading isn't for everybody. I know this for a fact. It's not for everyone. And so, yeah, if it's not for you, then that's fine. You have to find what is for you though. And I will tell you, working 40 hours a week or 60 hours a week or however many hours a week, working every day and, punching someone's clock. Yeah, that ain't for me neither. All right. So I had to find something to get out of the rat race. All right. I did my time. I did 21 years in the military. I think I'm cool. I think I just need to focus on what works for me and, just follow my dreams, follow my heart. And so, again, if you take any value from this, please like, comment, share, and subscribe. It would mean a lot to me and my channel. But I want to tell everyone out there, thank you for the continued support. Till next time, peace and love. Thanks, y'all.